Okay, welcome back. Let's start with the rest of the portion of CARO 2020. This is the last session. It may be for 1 hour 15 minutes to 20 minutes. Okay, with that we'll be completing entire all the clauses of paragraph number 3 of Companies Auditors Report Order 2020. Okay, let us go into details. So in the last session we were done till clause number 10. Clause number 10. Okay, now we'll start with clause number 11. Clause number 11, it is an important clause. Okay, I told you I told you that I'll give you 7 to 8 clauses which are very very important, right? At the end of the this video is going to be uploaded on YouTube, so I'll give all the details of 7 clauses which are very very important for the examination purpose. Okay, I'll give that in description box of my YouTube video, this video. Okay, done. So now it is 11th out of those 7. This is one of the clauses. Okay, done. So it talks about whether any fraud by the company. So it is particularly talking about fraud. Okay, clause number 11 talks about fraud, whether any fraud by the company or any fraud on the company. Okay, whether any fraud by the company or on the company, both the cases are covered. It is the case where the fraud is done by the company or fraud is being done on the company. Okay, has been noticed or reported during the year. Okay, if it is noticed or reported in the year, if yes, nature and amount involved to be indicated. So whenever you listen to the word called fraud, okay, in auditing we need to remember few aspects. Point number 1, it is CARO 2020. Point number 2, it is standard number 240. Point number 3, it is 143 subsection number 12 of Companies Act 2013, where it also talks about fraud only. Okay, reporting to central government. Okay, so now let us have a discussion on the difference between paragraph number 11 of CARO 2020 and 143 subsection number 12 of Companies Act 2013. Here, okay, let me give some basic details here. Okay, done. Here, clause number 11, it talks about fraud. It talks about fraud on the company or by the company Both the cases are covered in this fraud of paragraph number 11 of clause number 3. Okay, paragraph number 3 of clause, it is paragraph number 3, clause number 11. Okay, it is on the company or by the company, both the cases are covered. However, in case of 143 subsection number 12, only frauds against the company by officer or employee of the company is covered. Okay, this can be by anyone. Okay, so if you have to find the difference between these two, if you write clause number 11 here and write 143 subsection number 12 here, point number 1, what you can identify is it covers both the sides. Fraud can be by the company, by or on the company, and it can be by anyone. Okay, by on the company, by anyone, on the company, by anyone. However, in this case, it is against the company. It is against the company by whom? By employee or officer of the company. Employee or officer of the company. This is the significant point you need to identify. Okay, between clause number 11 and 143 subsection number 12. Okay, main point, it is by or on the company, which is noticed during the year. Okay, it is on the company by anyone, but here it is only by employee or officer of the company. Okay, and when it comes to 143 subsection number 12, there is one more important point. This must be known to the auditor in the course of performing his duties when he is conducting the audit. Okay, when he is conducting the audit, that is the significant point you need to identify. Okay, it must be noticed by whom? Okay, he has reason to believe that fraud is in existence. He must know this in performance of his duties. He must know this in performance of duties, in performance of his duties. Okay, done. So this is the difference between 11 and 143 subsection number 12. Now, so what is to be reported in this clause? This clause says if a fraud is done on the company or by the company, and it is noticed or reported during the year, if it is noticed and reported during the year, okay, then you need to report the nature of the fraud and amount involved in this. Okay, done. So let us summarize this. On the company or by the company, okay, noticed or reported during the year, then report, okay, report nature of the fraud and amount involved in the fraud. Okay, this is subclause number A of clause number, okay, 11, subclause number A of clause number 11. Okay, I hope you are all getting the point. I have given you the difference between 11 and 143 subsection number 12 also. Okay, done. Next point, subclause number B. Subclause number B. So what it talks about? It talks about whether any report under subsection number 12 of Companies Act 2000, subsection number 12 of section number 143. What is it talking about? Okay, it talks about fraud. Just now I have given you the details of 143 subsection number 12 also. However, if the amount involved in the fraud is, okay, if it is 1 crore or more, then the auditor has to report that fraud to central government, in form number ADT 4. Okay, so now as an auditor in CARO 2020, okay, subclause number B of clause number 11, he needs to report whether is there any report under subsection number 12 of 143, okay, which is to be reported to central government. Okay, is there anything happened like that? Okay, then you need to give the details whether any report under subsection number 12 has been filed by the auditor, okay, with the central government. What is this? Okay, what is this ADT 4? It is the, okay, report of fraud to central government by the auditor. If it is filed, go and specify that in subclause number B of clause number 11 of CARO 2020. Here we need to report if there is any such type of reporting to central government happened during the year. Okay, come to subclause number B, subclause number C. Okay, whether the auditor has considered the whistleblower complaints, if any, received during the year by the company. There is some concept of whistleblowing, okay, in the Companies Act 2013. What it says? It says if anyone identifies any fraud that is been happened in the company, okay, such person can escalate that matter, take that matter to the higher authorities, particularly whom, okay, it is taken care by, these frauds are taken care by audit committee. So whoever is raising the complaint to, okay, higher authorities, in case of, okay, audit committee, the chairman of the audit committee may be the higher authority. Okay, done. So such escalation of frauds or such escalation of some complaints, okay, to the higher authorities is called as whistleblowing mechanism. If someone uses that whistleblowing mechanism in the company during the year, okay, then such things to be reported by the auditor under subclause number C of clause number 11. Okay, see whether the auditor has considered whistleblower complaints. Okay, anyone in the organization, either it can be employee or any officer, okay, they can escalate the matter to the higher authorities. If any received, okay, during the year, then it must be considered by the auditor also. So whether the auditor has considered or not, we need to report here, okay, in this clause. Okay, I guess you are all getting the point. Okay, with this I am done with 11th clause of para number 3. Coming to 12th clause. Okay, okay, it talks about Nidhi company. This is applicable only when the company in which we are reporting, okay, if the company is a Nidhi company. If it is not Nidhi company, then this clause won't be applicable. Okay, for that purpose, now I am assuming whatever the company on which the auditor is giving this CARO 2020, okay, reporting, that company is a Nidhi company. Then we need to understand what is a Nidhi company first of all. Nidhi company is it is a type of microfinance company where it accepts the deposits from its members and it extends the loans to its members. Okay, done. It accepts the deposit from members. Okay, it has some money. That money will be given to other members as loan and it charges interest. Okay, so it is called as generally a Nidhi company. It is a similar type of finance company only which receives and accepts and gives the funds to its own members. Okay, so this is Nidhi company. Let us now look into the reporting requirements of Nidhi company in case of CARO 2020. It is specified in clause number 12. It is specified in clause number 1. This B and C you can just fill up. Okay, B and C, it is so easy. Okay, what is B? Whether 143 subsection number 12, okay, ADT 4 filed with central government or not, filed with CG or not. And what is last point? Okay, whistleblower mechanism activated. Whistleblowers, okay, whistleblower complaints are considered. Complaints are considered by whom? By employees, by auditor. This is what we need to report. Now coming to clause number 12. Clause number 12, it talks about whom? It talks about Nidhi company. This is applicable only when the client is Nidhi company. What is Nidhi company and all? I am not going to explain now. Okay, what is Nidhi company and all? Okay, it is not significant here. Nidhi company is a small finance companies which accepts and accepts the deposit from members and gives the loans to its members. Okay, it charges the interest also on that. So what are the reporting requirements under Nidhi company? For Nidhi company, whether the Nidhi company has complied with net owned funds to deposits in the ratio of 1:20 to meet out the liability. See, so when a company accepts the deposits from its members, okay, from its members, so this company cannot give whatever it accepted as deposits as loan. Okay, if 100 rupees is collected as deposit, immediately 100 rupees it cannot give as loan. Okay, so there must be some ratio that is to be maintained to have the liquidity. Okay, regarding that liquidity, okay, there are two aspects to be considered. Point number 1, okay, the company can accept the deposit. See, point number 1, this Nidhi company can accept the deposits, okay, not more than 20 times of net owned funds. What is net owned funds? Net owned fund is nothing but, okay, PUC plus free reserves plus generally securities premium. Okay, PUC plus free reserves plus securities premium. This is generally called as what? Net owned funds. And this PUC, particularly preference share capital, is not included for this Nidhi company. Preference share capital not included. Now this is called as what? Net owned funds. If the net owned funds is 1, okay, then deposits accepted from the member shall not be more than 20. So it is 1:20. Net owned funds to, so these are also called as what? Net owned funds. This NOF shall not be, okay, this NOF is to, okay, this NOF is to deposit accepted from members. Okay, deposits accepted from members. Deposits accepted from members. These are the deposits accepted from members. Okay, it shall not be more than 1:20. If it is 1, it shall not be more than 20. Okay, I guess you are all getting the point. Clear? So this is the first thing you need to report. See, whether Nidhi company has complied with this rule called as net owned funds to deposits is in the ratio of 1:20. If it is more than, okay, 1:20, then it must be reported here. Okay. Point number 2. So when the company is accepting the deposits, so if 100 rupees is accepted as deposit, 100 rupees you cannot give as loan, right? Because the company has to maintain some liquidity For that reason, whatever the deposits we accept from the from the members, out of that 10% shall be maintained as maintained as a separate fund, maintained with scheduled banks. I'll show you here. This concept of Nidhi company. Okay, this is Nidhi company. So net owned funds, okay, to deposit liability ratio it is 1:20, and this Nidhi company, see, here see, further every Nidhi company is to invest and to continue to keep invested in unencumbered term deposits, okay, with a scheduled bank. Term deposits with a scheduled bank. Okay, this is not encumbered, this is unencumbered term deposits with scheduled commercial bank other than cooperative bank or regional rural banks. Okay, or post office deposits in its own name, an amount which shall not be less than 10% of the deposits outstanding at the close of the business as on the last working day of the second preceding month, which needs to be examined. Okay, all these things we don't need to remember, but you need to remember just one thing called as whatever the deposits accepted by the company, Nidhi company, from its members, out of that 10% shall be deposited in a scheduled commercial bank, okay, scheduled commercial bank, deposited in scheduled commercial bank, okay, in an account. So in the form of unencumbered term deposits, okay, in form of unencumbered means nothing but it is, okay, it is free of any conditions, okay. Once you deposit, okay, whenever you want you can just receive back. That is what it is. Okay, so unencumbered, without having any charge or without having any conditions, that is called as unencumbered term deposits. In that we can just, okay, deposit. Okay, now as an auditor you need to check, okay, you need to check what? See whether the Nidhi company is maintaining 10% of unencumbered term deposits. Okay, it is free of charge or free of conditions. Okay, so this 10%, let us write some notes for it. Okay, net owned funds to deposits 1:20. Come to the second point, that 10% of deposit liability. What is deposit liability? These are the deposits accepted from members. Okay, 10% of deposit liability shall be, okay, maintained with whom? Maintained with scheduled commercial banks, in the form of what? In the form of unencumbered, okay, unencumbered term deposits. What is unencumbered? It is what? It is free of any conditions. Term deposits. It is for what purpose? So whenever there is a term deposit which is separately maintained, okay, whenever there is a requirement, this company can take out the money from there, okay, and it can utilize for, okay, its liability. For that purpose, this is for the purpose of liquidity. Okay, done. This is subclause number B. Come to subclause number C. Whether there has been any default in payment of interest on deposits or any repayment thereof for any period, and if so, give the details. So because the company is accepting the deposits from members, is there any default in repayment of principal or interest? That is what you need to report. So with this I am done with clause number 12. Let us go to clause number 13. Clause number 13, it is so simple in fact. Okay, whenever there are some transactions with related parties, okay, with related parties, this company has to comply with section number 177 and 188. Okay, now let us have some discussion on clause number what? Clause number 13. Clause number 13. I'll give you some notes for it. Yes. So this talks about, clause number 13 talks about transactions with related parties. Okay, then what we need to check? We need to check the complaints of 177 and 188, and along with that AS 18. Okay, AS 18 and or Ind AS 24 and Ind AS 24. So complaints of section number 177, 188 or okay, or disclosure requirements. This is disclosure of related party transactions, right? Disclosure requirements under, as an auditor we need to check disclosure requirements of AS 18 or Ind AS 24 has been complied or not. Okay, this is what we need to report under clause number 13. However, let us write some provisions of section number 177 and 188. 177, it talks about audit committee, because the work related to transactions with related parties, okay, the overview has to be verified by the complaints of these rules, provisions of Companies Act which are applicable with the transactions of related parties is to be verified by audit committee, So those provisions, some provisions of okay, section number 177 and 188 you need to write now. I'll dictate, you can just write there. Okay, approvals of audit committee shall be taken when there are related party transactions. As per section number 177. Second point, section 188 requires approval of board of directors, or approval of shareholders by way of resolution in a meeting, general meeting. Okay, when there are related party transactions. Okay, so this section number 188 talks about approvals that are to be taken when the company is entering into any related party transactions. Either it can be board of directors approval or it can be shareholders approvals in the general meeting. Done. So now read this 13th clause. Whether all the transactions with related parties are in compliance with section number 177 and 188, okay, where applicable, and details have been disclosed in the financial statements as required by the applicable accounting standards. What are the applicable accounting standards? It is AS 18 and Ind AS 24. So this is what we need to report there. Okay, this is section number 13. come to section number 14, like clause number 14. Clause number 14. It is so simple that whenever there is a company and it depends on the size and nature of its business, it may need internal audit system. Now as an auditor, in this paragraph, in this clause, what you need to report, whether the company has an internal audit system commensurate with this, matching with its size and nature of its business. Okay, then this point number 1, and whether in case if there is any internal audit report, in case if there is any internal audit system and internal audit report is given by that internal auditor, whether is it considered by the statutory auditor or not, shall be reported in subclause number B. Whether the reports of internal auditors for the period under the audit were considered by the statutory auditor. Okay, point number 1, it is asking you to check, is there any applicability of the internal audit system? Is there any internal audit system which is commensurate with the nature and size of the business? If it is yes, come to the second point, the report which is given by the internal auditor has been considered by the statutory auditor or not. Okay, this is clause number B. Let us write here. Okay, clause number 14. Clause number 14. It is not clause number 14. Yes, clause number 14. Yes, clause number 14. What is this? It talks about internal audit system. Internal audit system. Okay. So subclause number A talks about, is there any internal audit system, okay, which is matching with size and nature of business. If there is any internal audit system, then come to clause number B. See, if A is not satisfied, then there won't be any clause B, right? Because if there is internal audit system, then only internal audit reports, whether the internal audit reports are considered by statutory auditor or not. Okay, this is subclause clause number 14. Let us go to clause number 15. Easy clauses only. Clause number 15. What is clause number 15? Clause number 15 talks about non-cash transactions. Non-cash transactions. Transactions with whom? With directors. Okay. Generally, this is covered under section number 192. 192 is the restriction on non-cash transactions with the company by the directors or the connected persons of directors. Okay. So now what it is talking about? Okay. Let me show you the material also. So you can get that confidence of this section. This is what section number 192. Section number 192. Okay. Actually, this is CARO 2016. Some of the notes is picked up from CARO 2016, and that is relevant for 2020 also. For that reason, what I am saying, okay, whatever I say, you just need to write it as notes. Okay. So non-cash transactions. What is non-cash transaction? It is section number 192, which deals with the restriction of non-cash transactions involving with directors or persons connected with them. Okay, persons connected with them. See this? Yes, we can have a beautiful notes for it. Yes. When is this section number 192 is applicable? 192 is applicable when there is, okay, any transaction other than for cash. Between whom? It will be between director or any person connected with whom? Connected with director with the company, or between the company and the directors. Two cases are covered. It is between, okay, any exchange of assets. In fact, it is exchange of assets. So what is called as other than cash? It is exchange of assets. When one asset is given by the director to the company, another asset is been exchanged from the company's side. This is called as non-cash transaction. Okay, when it is covered under section number 192, it may happen only after taking the resolution of, okay, it happens only after taking the resolution of members in a general meeting. It happens only after, it is possible only after taking the resolution from members. Now as an auditor, in this clause, okay, which clause? Clause number 15, is there any, see whether the company has entered into any non-cash transactions with the directors or persons connected with him, okay, and if so, whether the provisions of section number 192 of the Companies Act have been complied with or not. So first leg of this paragraph is, clause is, okay, are there any non-cash transactions? And if it is yes, come to the second leg called as complaints of section number 192. What is complaints of section number 192? Whether the resolutions from the members have been taken or not before they enter into such transactions with the company, or it may be between whom? It will be between company and the directors or the persons connected with the directors. Okay, and it is for non-cash transaction. It is a non-cash transaction. It is just an exchange of assets between them. Okay, with this I am done with clause number 15 also. Okay, clause number 15 also. Though there are no subclauses, okay, directly you can write what? Are there any non-cash transactions with the directors or persons connected with directors? Persons connected with directors. Okay, and if it is yes, then is there any complaints of section number 192? Okay, whether 192 section is complied or not. What is section 192? It is what? Resolution of members in a general meeting shall be taken before company enters into such type of transactions. Okay, this is 15. Come to 16. Okay, now it is 16. 16 talks about, okay, NBFC. 16 talks about NBFC, non-banking financial companies. So if my client is non-banking financial companies, then only this clause is applicable. If not, you can go and write there not applicable. Okay, it is not applicable. This clause is not applicable in case if my client is not NBFC. If my client is NBFC, then go and report under clause number 16 that whether the company is required to be registered under, okay, section number 45 IA. So before an NBFC starts its business, it must take the prior approval from RBI as per section number 45 IA. Okay, so there are 4 subclauses. Okay, clause number A, whether company is required to take registration. Company is required to take registration as per what? Under section 45 IA of RBI Act. Okay, and if it is yes, then of RBI Act. Okay, and if it is yes, whether taken or not. What is taken? Registration is taken or not. This is subclause number A. Come to B. Whether the company has conducted any non-banking financial or housing finance activities without a valid certificate of registration from the Reserve Bank of India as per the Reserve Bank, okay, of India Act 1934. Okay, this is also so simple. If the company is conducting any non-banking financial activity, okay, then non-banking financial activity without taking the permission from RBI, then you need to report. So first clause it talks about taking registration. Second clause it talks about conducting any activity without registration. Okay, conducting any activity without registration. Okay, this is point number B. Come to subclause number C. It talks about a different type of, okay, NBFC. NBFCs are different types. Out of that, there is one of the type, okay, one of the NBFC is CIC. Okay, NBFC CIC. NBFC CIC. Okay, I discussed this in NBFC chapter, in fact. Okay, there is a video on my YouTube channel regarding this NBFC. You can just go and watch. It is helpful for you. Okay, for CA final examination. It is around 1 hour to 1 hour 20 minutes, I guess. Okay, in that 1 hour 20 minutes, you will get all the details of NBFC, and which is very, very important for examination purpose. Okay, so there are many types of NBFCs. Out of that, one of the NBFCs are, okay, one of the NBFCs is NBFC CIC. CIC. What is CIC? Core Investment Company. Core Investment Company. So the business of NBFC CIC is it mostly focuses on, okay, investing its money in equities. Investing its money in another companies and equities. Say example, CIC is nothing but the core business of the company. The core business of NBFC is investing in another company. Core business is what? Core business is investing in another companies. Okay, investing in another companies. The two mostly its focus will be on equity. Will be on equity. Okay, this type of company, NBFC CIC. First of all, to be called as NBFC CIC, there must be certain criteria which is to be fulfilled. Okay, there must be certain criteria which must be fulfilled. See, B I am not writing, so I can also write this. Okay, transactions without transactions. Which transactions? Non-banking finance transactions or housing finance transactions without taking registration. Okay, report those things. Clause number C, subclause number C. To be called as NBFC CIC, okay, criteria must be fulfilled. Criteria to be fulfilled. Okay, what is that criteria? So this company's core business activity is investing. So if the investment is okay, more than, if the investment is 90% or more, okay, more, if the investment is more than or equal to, see how it can be written. Okay, investment is more than or equal to, okay, 90% of total assets. See, whenever there is a balance sheet, if this is total assets, okay, out of total assets, 90% of the assets are investments only. Where are these investments made? It is in another companies. Okay, this is called as CAC. The first condition is investment shall be, okay, more than or equal to 90% of the total assets. So whatever the assets are there, out of that 90% are invested in another companies, and particularly 60% of total assets are in equity only. This is there in NBFC chapter. Okay, this is called the criteria to be fulfilled for CAC. Okay, now in this clause, see, whether if the company is CIC as defined by RBI, whether it continues to fulfill the criteria of CAC. So once the company is called as CAC, it needs to satisfy the criteria to be continued as CAC. So now as an auditor, you need to report in the current year, is the criteria fulfilled by the company, okay, to be called as CAC. The criteria for what purpose to be called as CAC, it is there or not, you need to, okay, you need to report. See, whether the company is core investment company as defined by RBI, okay, this is core investment company. Now as an auditor, you need to report what? Whether it continues to fulfill the criteria. So what is the criteria? 90% of total assets are to be invested in someone, in some other entity, and out of that 60% will be what? In equity only. And there are some exemptions also which are applicable for it. Okay, so there must be some certain criteria for exemptions of CAC. Okay, exemptions of CAC, and along with this you need to report what? In case the company is an exempted company, which is not required to be taken registration, required to take the registration as CAC, whether such criteria, which criteria? Exemption criteria. This is not required for you. Exemption criteria, those criteria and all, it is not required for examination purpose, and hence you need to report what? If a company is NBFC CAC, okay, as an auditor you need to report whether it fulfills the criteria for being a CAC, or if there is any exemption, whether such exemption criteria is fulfilled or not. That is what you need to report under subclause number C. Okay, subclause number C. See, NBFC CAC. Then as an auditor you need to report what? Whether criteria is fulfilled. Okay, either for being CAC or for exempted CAC. For both the cases we have what? Criteria, whether it is okay matching or not, whether the criteria is fulfilled or not, that is to be verified, whether the criteria fulfilled for being CAC or exempted CAC. This is subclause number C. Come to subclause number D. Subclause number D. See, whenever there is CAC, one company is going to invest in another company, then all those companies will form a group of companies, right? Form a group of companies, and in that group, how many CACs are there? When can you call a company as CAC? When the criteria is fulfilled. So in that group of companies, how many companies are satisfying the criteria to be called as CAC? That is what you need to report. Okay, see, whether the group has more than one CAC. Okay, more than one CAC. If yes, indicate the number of CACs which are part of the group. Okay, when one company is investing in another company, all those companies will be called as group companies. Group companies. In that group companies, if there is more than one CAC, then go and report how many number of CACs are forming part of that group. That is what you need to report in subclause number D. Okay, if more than one CAC in the group, if more than one CAC in the group, then give the number of CACs forming part of what? Number of CACs forming part of that group. This we need to report. This is clause number 16. Clause number 16. Come to clause number 17. Last 4 or 5. 17, 18, 19, 20, 21. 5. Clause number 17. Clause number 17. So it talks about cash loss. What is cash loss? See, whether the company has incurred cash loss in the financial year and in the immediately preceding financial year. So in the financial year we need to check up, and in the preceding financial year also we need to check up if there is any cash loss. Okay, and if so, state the amount of cash loss. What is cash loss? First of all, cash loss is nothing but, okay, see when there is, okay, P&L account, incomes will be there, cash expenditure will be there, non-cash expenditure will be there. Okay, non-cash expenditure. So sometimes there may be a case of net loss. From that net loss, okay, to get the net loss, you need to reduce cash expenditure, non-cash expenditure. Example, depreciation. So from net loss, if you reduce the depreciation, if you reduce the non-cash expenditure, then it will give you cash loss. It gives you cash loss because this is the actual cash loss from your pocket you are incurring. Okay, if there is any such type of cash losses in the financial year or in the immediately preceding financial year, then go and report the amount of cash loss what they get. Okay, this is clause number 17. So cash loss in the financial year or during the immediately preceding financial year, okay, during immediately preceding financial year, okay, then report what? Then report the amount of cash flow, the amount of cash loss. What is cash loss? Cash loss is nothing but, okay, the loss which we get without considering non-cash expenditure. What is non-cash expenditure? It is depreciation. So this is clause number 17. Okay, clause number 17. Come to clause number 18. Clause number 18. Let us see this. Clause number 18. Yeah. So in a financial year, you are appointed as an auditor. Now, before you are being appointed, the existing auditor who is already there, who is already appointed in that company, he resigned. In place of him, you are going as an auditor. Now you are acting as an auditor in place of a resigned auditor. If such case exists, then see whether there has been any resignation of the statutory auditor during the year, and if so, whether the auditor, now it is you, okay, who is replacing the outgoing auditor, okay, whether the auditor has taken the consideration the issues and objections or concerns raised by the outgoing auditor. See, there is an outgoing auditor who resigned. Okay, there may be some issues or concerns relating to that particular auditor, right? Okay, whether those are considered by the incoming auditor or not, this has to be reported. Incoming auditor or not, this has to be reported. See, whether incoming auditor has considered the issues or concerns of the outgoing auditor by way of resignation during the year. If the resignation is not there in the year, then this clause won't be applicable. Okay, during the year, there is an outgoing auditor because of resignation during the year, then this clause is applicable. Then the income auditor, okay, has to report whether he has considered the issues and concerns raised by the outgoing auditor. Okay, this is clause number 18. Come to clause number 19. Clause number 19. 19, 20, 21, 3 are still pending. Okay, clause number 19. Clause number 19 talks about going concern. It talks about going concern. Auditor needs to report. See, auditor needs to report whether in his opinion that there is no material uncertainty existence, okay, is in existence as on the date of auditor's report, as on the date of, not balance sheet, as on the date of auditor's report, that the company is capable of meeting its liabilities existed at the balance sheet date as and when they fall due within a period of 1 year from the balance sheet data. Okay, now let us have some basic discussion on this. Okay, what is the balance sheet date? 31/3/2022. Okay, and what is the auditor's report date? It is, imagine it is 39, okay, 2022. Imagine, okay, on this date he is giving the CARO also. Okay, this is the auditor's report. Now whether he has that opinion or not, whether the auditor is of opinion that there is no material uncertainty, okay, that the company is capable of meeting its liabilities, and he has to have that opinion that the company is capable of meeting its liabilities, okay, in the coming future, okay. So he has to have this opinion that company's liabilities which are there on the balance sheet date, okay, those liabilities can be paid off by the company. The company is capable enough to pay these liabilities which are there on balance sheet date, and it happens within 1 year. It happens within 1 year. So for 1 year time, there is no material uncertainty that company is not going to pay the money. Okay, the company is capable enough to pay the money within 1 year from the balance sheet date. So whatever the liabilities which are there on the balance sheet date, it is capable enough to pay back. Okay, pay the liability within 1 year of the balance sheet date. That is what the opinion shall be there with the auditor. Okay, whether this opinion is there or not, we need to report. And this opinion to form by the auditor, he must have certain basis. Without having basis, he cannot form that opinion. Okay, without having the basis, how can he get that opinion? What can be the basis? It can be the basis of various financial ratios. It can be the basis of aging analysis, expected dates of realization of financial assets, because to settle the financial liabilities, there may be financial assets which can be settled for the company. There may be a receipt also, and using that receipt, you can pay off the liability. And depending upon everything, he needs to form an opinion whether the company is having that material uncertainty, whether that material uncertainty is there to meet the to meet the liabilities within 1 year of the balance sheet date of whatever the liabilities which are there on the balance sheet date. Okay, and that opinion shall be there on which date? On report date, audit report date. The opinion shall be there on auditor's report date. The capability to pay the liabilities which are existence on balance sheet date within how many days? 1 year of balance sheet date. 1 year of balance sheet date. What is the basis for the same? It is financial ratios. Okay, after getting the knowledge of financial ratios, aging analysis, okay, expected dates of realization of financial assets and payment of financial liabilities, any other information accompanied in the financial statements. This is the basis. The first part of this is the basis, and it depends upon the basis, okay, on which you are required to form an opinion regarding the material uncertainty. I guess you are all getting the point. Okay, now how to write going concern? What is going concern? No material uncertainty. Okay, now as an auditor, you need to report whether that material uncertainty is there or not. Material uncertainty is there or not. As on which date? As on auditor's report date. Okay, this material uncertainty is regarding what? This material uncertainty is regarding, okay, capability to settle the liabilities as on what date? Liabilities which are there on balance sheet date. Okay, to settle the liability which is, okay, liabilities which are there on balance sheet date within 1 year of what? Balance sheet date. 1 year of balance sheet date. This is whether this material uncertainty is there or not, you need to report. That opinion, okay, this opinion can be formed by the auditor. On the following basis. What is the basis for the same? Aging analysis, ratio analysis he can do. Okay, aging analysis he can do, keeping in mind the settlement dates of, okay, keeping in mind the settlement dates of financial assets and financial liabilities. This is the basis for forming an opinion. Based on this, he needs to form an opinion that is there any material uncertainty, okay, which is there on the balance auditor's report date. What is material uncertainty? In relation to the capability to settle the liabilities which are there on the balance sheet date within 1 year of the balance sheet date. Okay, with this I am done with detailed explanation of section. Okay, clause number 19 is done. Clause number 19. Let's come to clause number 20. I am so happy that I am closing this chapter. Okay, not chapter, in fact it is only CARO 2020. It has been almost 4 hours. Okay, it's been almost 4 hours I have started this session. Okay, and we are almost at the end of the end of the CARO 2020. I'm very happy for this. Okay, such a huge discussion we have made. Okay, I hope it helps you in the examination, whatever the discussion we made in the classroom. Okay, done. So clause number 20. Clause number 20 talks about CSR activity, corporate social responsibility. Now, there is one section called section number 135. So, it is an advantage for me to say, to teach this CARO 2020 in fact, because whatever the section I talk here, it is already there in CA Inter, and I was teaching CA Inter law, okay, from last 3 or 4 years. For that reason, it becomes easy for me to teach CARO 2020. Previously, I uploaded one video on GST audit. Okay, so that video got more views in my entire YouTube videos. Okay, because GST is a subject which I teach from last many years, and GST audits. Okay, while I teach GST audit, I can correlate each and every aspect so simply, and it got good comments also. Okay, that video got good comments also. Okay, I was very much pleased to upload that video at that time. Previously, before 1 year, I uploaded in fact. Okay, now the same state of mind I'm having now, because all those sections, whatever I discussed now, section number 135. Okay, it is corporate social responsibility. 135 of Companies Act 2013. It talks about every company for which the criteria is applicable. There is certain criteria which is there in section number 135. Okay, that company has to constitute CSR committee, and this committee shall take care of this corporate social responsibility. Okay, they shall be responsible for spending money. Okay, spending expenditure on what? On CSR activities. Okay, how much to be spent? Such expenditure shall be not less than 2% of average net profits of immediately preceding 3 years. Immediately preceding 3 years. Okay, and this committee shall take care of the expenditures that is to be incurred in relation to CSR activities. Okay, that is how much to be spent? 2% of average net profits of immediately preceding 3 years. Okay, so if this amount is spent, there won't be any problem. Okay, if this amount is not spent, it is called as unspent CSR expenditure. If it is not spent, see, if not spent, it is called as unspent CSR expenditure. Okay, this unspent CSR expenditure may be because of 2 reasons. Okay, there may be a case where some of the projects of CSR may take more than 1 year. It may take 2 years or 3 years. So there may be a case where this expenditure has to be incurred evenly in those 2 or 3 years. This is called ongoing project. It is called as ongoing project. So in the current year, there may be some unspent amount of CSR expenditure because of what? Because of ongoing project. That expenditure is to be incurred in coming 1 or 2 years. Okay, this is the unspent expenditure because of what? Ongoing project. Then there won't be any problem. Whatever the expenditure which is still pending, that shall be kept in a separate bank account, and which shall be used within 3 years. So in case of ongoing project, it shall be used within 3 years. Okay, this is called unspent CSR expenditure. So there may be a case where this unspent CSR expenditure is because of outgoing project. Say ongoing, it is not outgoing. Ongoing project or other than ongoing project. Other than ongoing project. If it is other than ongoing project, when company fails to spend this much of amount, what is this much of amount? What is that? Okay, it is 2% of average net profits. Okay, it is, if it fails to spend this much of amount, then what a company needs to do? That company needs to deposit such amount. With central government, such amount with central government in the fund as per 7th schedule, in the fund as per 7th schedule, as per 7th schedule. Okay, it is a central government fund where the money once deposited in central government have that authority to utilize. Okay, it is generally recently we heard some of the funds like PM CARES fund, etc. Okay, for that funds there are many things. Okay, you can just open section number 135 to look into this type of funds. Okay, once the company fails to spend 2% of average net profits of the preceding 3 years, okay, and that failure is because of other than outgoing projects, then such amount, the pending amount, shall be deposited with the central government fund. Okay, that fund is called as Schedule 7 fund. Okay, there are various utilizations from that fund. What central government will take care of? That fund will be now out of the hands of the company and it will be there with the hands of, okay, with the hands of central government. Okay, I guess you're all getting the point. Okay, and this fund shall be deposited within 6 months, within 6 months from the end of the financial year, within 6 months, from end of financial year, within 6 months from the end of financial year. I guess you're all getting the point. Unspent CSR expenditure, if it is because of other than ongoing project, it is a single year project but you fail to spend, then what you need to do, within 6 months from the end of the financial year you need to deposit in the, okay, Schedule 7 fund, which is taken care by whom? Which is taken care by central government. Done. If it is a case of ongoing project, then you don't need to directly deposit that money with the central government. You can deposit with a separate bank account. Keep that amount in the separate bank account within 30 days. Okay, see, ongoing project, if it is because of ongoing project, within 30 days, it shall be deposited, in a separate, from where this 30 days shall be counted, within 30 days of end of the financial year, within 30 days of end of financial year. Okay, it must be deposited in a separate bank account, beautiful, separate bank account, and it must be that amount shall be utilized within 3 years, right? So only the time given for ongoing project is 3 years. If it is not utilized within 3 years, okay, within 3 years, then, okay, if not utilized within how many years? Within 3 years from such account. Okay, if not utilized within 3 years, transfer such unspent amount to where? To, again, Schedule 7 fund, which is in the hands of central government. Okay, transfer such unspent amount to schedule within how many days? Within 30 days. Within 30 days from the end of third year. Simple only, right? Okay, from the end of third year. This is the new amendment in section number 135. Previously, it was not there. Okay, from this attempt only it is been introduced, and this is unspent CSR expenditure because of ongoing project, because of other than ongoing project. If it is other than ongoing project, directly keep the money in, okay, in the separate fund, okay, under central government Schedule 7 fund. Okay, when it is ongoing project, then within 30 days, okay, within 30 days you need to deposit that in the separate bank account, and if the money is still unspent in that bank account, okay, within 3 years, then within 30 days from the end of the 3 years shall be deposited in the Schedule 7 account. Okay, this is complaints of 135. Okay, see, okay, 135. Now let us have the discussion. See, whether in respect of other than ongoing project, the company has transferred the unspent amount to fund specified under Schedule number 7 to the Companies Act within a period of 6 months from the expiry of the financial year in compliance with the second provision of, okay, provision of subsection number 5. This is subsection number 5. Other than ongoing project. In our chart, it is, okay, it is 135 subsection number 5 other than ongoing project, that shall be reported. Coming to second point, where any amount remaining unspent pursuant to ongoing project has been transferred to special account in compliance with provisions of subsection number 6. See, first one, it is 135 subsection number 6. Ongoing project 135 subsection number 6, other than ongoing project 135 subsection number 5. Okay, whether are the subsections 5 and 6 are complete or not, you need to report. Okay, with this I am done with clause number 20 also. Clause number 20 also, all the details are given. Come to the last clause, it is 21st clause, which is very simple. Okay, which is very simple. So now I am talking about, I am the auditor of of the financial statements, in fact it is consolidated financial statements. In that consolidation, there are many companies whose financial information is being consolidated. Okay, there are many companies. Imagine consolidated financial statements I am auditing, and I am now going to report. Okay, I am going to give the CARO on consolidated financial statements. Okay, there are 10 companies which are being consolidated. Now these 10 companies may have different auditors. These 10 companies may be covered under CARO 2020. All the 21 points may be there for these 10 companies. Okay, when there is any negative comment or qualified comment which is to be given in any clause of those 21 of those subsidiary companies, okay, of those companies which are being consolidated, okay, then those details shall be given by the auditor who is auditing this consolidated financial statements, the auditor who is going to give the report on consolidated financial statements. This is what it is. So, okay, clause number 21, whether there have been any qualification or adverse remark by the respective auditors of those companies, okay, which are being consolidated, okay, and if yes, if that answer is yes, if there is any adverse or qualified remarks which is given by other auditors, indicate the details of those companies, and the paragraph numbers out of 21, which paragraph is having that adverse remark. Okay, the paragraph numbers of the CARO report containing the qualified or adverse remark. Okay, in this clause what I need to write? I need to identify those companies whose CARO contains the qualified or adverse remark, and which paragraph number is been given with the adverse remark, that I need to report. So I am the auditor of, I am the person who is going to report on consolidated financial statements, and I need to get the information of those companies, okay, in whose CARO the negative remarks are being given by those respective auditors, and in which paragraph number that negative remark is there. That is what it is there in clause number 21. Okay, so let us write clause number 21 also to complete this. Clause number 21. Clause number 21. What is this? Details of companies and paragraph numbers which contain qualified or adverse remark in CARO 2020, okay, of any company which is being consolidated, details of companies and paragraph numbers which contain qualified or adverse remark in CARO 2020 of any company which is being consolidated. So main auditor shall give these details. Okay, done. With this I am done with clause number 21 also. Okay, I'll give you the important clause details, clause numbers Okay, and I just want to make another video also in short form containing around 30 to 35 minutes, okay, where I just want to give you some exam oriented important points in that video, that I am going to upload on the on YouTube. Okay, all the important clause details, everything I will give on the on my YouTube description box only. Okay, done. So with this I just want to wind up the session. Okay, done. All the best.